What up, guys?
Good morning.
Alan Johnson and
Crystal Johnson here, and we are going to bring to you a new series, a new little something that we want to put together. It's not really new because we're going to talk about the same things we always talk about, except for we changed the title
yeah,
because we think this is a more appropriate title. So, welcome to the first edition of Love and Real
real
Estate.
estate.
Right? Love and Real Estate is going to be a conversation between Alan and myself, just talking about our journey through real estate, the trends that we see in the market, the challenges that we see in the market, the opportunities that couples, families, individuals have to take advantage of what the real estate industry has to offer, and ways that you can make sure that you don't get caught in situations that are unfavorable for yourself. So, Alan,
What I
get
imagine,
started.
what I imagine love and real estate being about.
Yeah, go ahead.
So first and foremost, I got my Outcast shirt on, right? So we're gonna talk about something we love first, right? So
Yes,
I
yes.
love hip hop. So I'm gonna ask you, what's your favorite Outcast song?
Oh my gosh. Oh, come on, Miss Jackson. I mean, that's just a quintessential favorite. Sorry, Miss Jackson.
Ooh, I am for real.
Yeah.
Never meant to make your daughter cry. I apologize a trillion times.
My mom
Yes.
threatened him, so he was never going to cry, so it was all good.
Think my favorite Outcast song. I got too many of them. But Me and You,
Oh, and your
your mama
mama
and
and your
your
cousin
cousin
too.
too. Rolling down the strip of
Mhm.
Vogue. Yeah, yeah.
Yeah. Well, shout out to Outkast for being
Outcast.
inducted into the Rock and Roll Hall of Fame, which is pretty awesome.
Yeah.
So, very diverse musical talents
Yeah.
there, which is amazing.
So let's get rolling. Today we're going to talk about do we even say his name during this video?
No, we're just going to talk about the fact that there has been a proposal
Proposal.
from our current administration,
Current administration.
the top of the current administration,
Top of the current administration.
on how we can address affordability with home buyers and future home buyers. And that idea that has come to the forefront is something that we're just going to go ahead and put it out there. We don't agree with it. We just think that at the end of the day, even as real estate professionals, right, we want people to be able to afford homes. We want people to be able to make real estate a great opportunity for them to have somewhere to live and to build wealth, right? Because that's part of that American dream. But on the same token, we want people to be able to do it under the right terms and not something that's going to lead them to a place where, they are not better off than where they started. Okay. So with that being said, there has been a proposal put out there, and I think they're already in the works, just so you all are aware, to bring in 50-year mortgage terms. You heard me, 50. So 30 was put out there, in the past to help ease affordability back in the day. 50 is being put out there now to basically say they want to accomplish the same result. And we're going to talk to you guys today about what our thoughts are on that. Okay.
Yeah. So, first of all, it's an option, right?
Yes.
So you don't have to take 50
Yeah.
year mortgages, right? That's the one thing. Just like you could take, like we got a 15-year mortgage, right?
Mm-hmm.
On quite a few of our investment properties. If you're buying something commercial, it's likely going to be a 15-year or 20-year term. The normal term is 30 years. That's what a vast majority of buyers get when they're purchasing a home. But I will tell you that I remember there being a push back when things were getting unaffordable before the crash and people were getting into 40-year mortgages. There was one bank, I believe Bank of America was doing 40-year mortgages. And looking back on it, for very few people,
Mm-hmm.
it worked out because they were super disciplined. They
Mm-hmm.
were taking the savings that they were getting from the 40-year mortgages and applying it to chipping down the mortgage, or they were applying it to other real estate investments, or they were stacking that money,
Yeah.
right?
Or they're making improvements that would help the value of their real estate increase. Right.
Right. But that's we're asking a very unsophisticated buyer to make a very sophisticated implementation of this 50-year mortgage. And I just think that there's so many assumptions that have to happen for it to work out.
Yeah.
That is just really dangerous. Like I saw a guy, he's a president of a bank, and he was proposing, first of all, shout out to all the conservatives. that call BS, right? You don't have to agree with everything someone says. And I've been seeing some of my conservative real estate friends
Mhm.
that I know voted one way that look at this and are like, this does not work out. And I think that's a really healthy place to be when you don't agree with everything, right? And you can look at it from a wide lens. So shout out to all those people who
Yeah.
just don't agree with everything.
Yeah, and vice versa. That's on any side, right? It doesn't matter what side of the aisle you're on. Like you need to look at every policy, every decision, everything that's being made for what it's worth,
Yeah.
no matter the side, right?
Yeah.
And I think that's just healthy for us as American people in general. So that's just my opinion. Take it, leave it, whatever you want to do with it. But yeah, to Alan's point, this is an option, right? Not everyone is going to exercise this option, but I do want to make sure that people will have a level of awareness, right, of what this would mean if you did commit to it. I think that the reality of the situation, if I'm just looking at it from one of the first things that I see, other than the fact that people will technically be renters, right? You're not going to make a dent in any principle of your mortgage, right? When you have a 50-year term for a long time. And when I say a long time, it's not going to be significant till like 10 years in, right? In terms of what is this doing to actually buy down the mortgage that you took. You're literally paying a ton of interest. And just one other thing before I get into that is that the difference between when that 40-year loan was being offered, back in 2013, no, before that, I'm sorry, like 2004.
Right.
Yeah, that time frame was that interest rates were a little bit lower than where they are today. They weren't 3%. So a lot of people think, oh, well, that interest rates were 3%. Then no, they were still about 5%, right? And I will say that a 5% interest rate on a 40-year loan is going to be way better than that where we're at right now, that 6.5%, 6.75% on a 50-year loan. So just keep those terms in mind, right? But regardless of all those things, what's most important people to think about is how long you're going to be carrying that debt and how that debt multiplies as it relates to interest, right? There's a calculation that we looked at, and I know that Alan has something he wants to share with everybody, but to show you like how much your interest will potentially double in the life of that loan by changing those terms and extending it by another 20 years.
Yeah. So the question that we're getting from a lot of people is, how much more interest will be paid over the life of the loan, right? Mm-hmm. So we just did basic math. You guys can go to a mortgage calculator. I encourage all my realtors friends out there to get used to a mortgage calculator. But $500,000 property, right? Putting 5% down. Mm-hmm. The difference in monthly payment between a 50 and a 30-year mortgage is roughly about $400 difference, right? But the difference in the total interest over the life of the loan is double, right? So it's like just under 600,000 and it's 1.1 if you get to that 50-year mark, right? So, I just think it's something that you got to start to think about, like, what are you sacrificing to get potentially a payment that's not that much lower than what you would get on a standard mortgage. And you have to take that into account. And then the other question is, does it truly make home ownership more affordable, right? And it can make it more affordable in the short term, but it makes it almost double in the long term.
Yeah.
Right. So it's like almost kicking the proverbial affordable. They're using the word attainable, for housing now, down the line, and you're kicking it, and it's going to be a much bigger can down. It's going to be a barrel, right? by the
Avalanche.
Time, by the time you get down the line.
Yeah, no, that's so true. And I think that as I think about it, and I was making some additional just considerations about it, is that yes, in the short term, to Alan's point, it will make it easier for someone to enter into the housing market. But ease comes with a lot of risk. And a lot of the risk is the reality of the situation, which is that you're going to increase your burden of costs, right? And not only will you do that, affordability will be good for that short interim, except for now we're going to have a lot of buyers, right, entering into the market that is already has inventory issues, right? So we've seen inventory increase over the last year, but a lot of that is due to us keeping interest rates higher, right? And that was by design, right? There was no one's surprised that rates are high. They were put high by design to put the brakes on the amount of just increase in home values that we've been seeing over the last several years, right? It was just one of those things that we can't keep that pace. right? So there was a reason why interest rates was raised to put the brakes on things and slow down inflation. Well, if we still keep interest rates high, but also introduce, an option to make things more affordable through this 50-year term, what that does is it throws a bunch of buyers back into the market, and we really haven't fixed the inventory problem, right? And if you don't fix the inventory problem, then now you're going to have prices continue to rise, and it will still make home ownership unaffordable because it's just expensive, right? So we got to look at the cause and the effect and the relationships between those things if we make these types of decisions.
Right. So affordability, yes, it does short term make it more affordable, but long term, it makes your debt load almost essentially double, right?
Yeah.
I think the other things that we need to start thinking about are like, do we expect the market to continue to go up, right? Do we expect the market to continue to increase? Because that's the only way that a lot of these buyers will be able to sell these homes without being underwater, is if the market continues to go up. And it was one of the bank presidents, he put up a scenario, and it assumed that the housing market over the next 5 years was going to go up by 4% every year. That's depending on where you buy in the market, that's a very dangerous assumption. And we know that the average home buyer only stays in the property for a certain amount of time, right? Maybe 7-10 years, right? Well, that person is likely not going to be able to refinance into something without bringing cash to the table. If they're in a negative equity situation, they're going to have to bring cash to the table if they're going to have to sell at a certain time in the market. So I think for this to work, there are going to be so many things that are going to have to be perfect that it just feels like that. I don't mind the option being out there. I just want to make sure that everyone out there understands the implications of making that choice.
Yeah. I mean, only other thing that I would add to this part of the conversation really is that, the thing that makes me uncomfortable, right, is the fact that, and again, it's new. So we're still diving deep and doing some more research and just thinking it through from a lot of different angles. But the first thing that causes me heartburn, right, is that I feel like it's a debt trap, right? I feel like a ton of people will see this as their only option, because for many people, this will be their only option in order to get into home ownership. And what will happen, because they don't have other options, right? Because everyone's going to say, so, well, you can always choose a different mortgage type. Well, no, if you feel like this is the only option because it truly is the only one for you, that they are going to be riddled with a level of debt that they won't be able to dig out of. And I don't think that bodes well for the economy as a whole, and most certainly not for individual families. So I just think that we have to be thinking about other options that are available out there for people to take advantage of.
Yeah. Tell me this. Do you think this will inflate home prices more?
Yes. Yes. I think it's going to inflate home prices more for a couple of things I said before. It's just that, if we push more buyers back into the market, right, what will happen is that there is still the inventory problem that we haven't fixed, right? In the short term, right, we built up a little bit of inventory, and that took us 3 years to build the inventory that we have, that in some areas is still less than, 3 months of inventory, right? In a stable market environment, there's 6 months of inventory, right, to make it pretty stable. But if we push something like this out and then more people enter into the market, all the gains that we had in terms of building inventory and kind of slowing down home appreciation a little bit is all going to be out the window, right? It's all just going to recycle itself, and we'll be back in the same position that we've been in for the last few years.
Yeah, I said, yes, it will inflate prices, which is very unhealthy for the overall economy and the housing market. Anytime we start to manipulate the market, there are going to be things that are going to happen. There's going to be some repercussions down the line. And man, I look at our president's history of business decisions, especially when it comes to real estate. And it's 50-50.
Yeah.
And it's ironic that we're talking about a 50-year plan, right? And his success in real estate literally is 50-50, right? He's just as likely to have bankrupted as he is to have a successful real estate venture, right?
Yeah. And a lot of the success was marketing. not even necessarily the real estate.
Yeah, yeah. He was
Marketing genius.
correct, correct. But owning real estate and being able to like understand real estate is a very different and very delicate balance. I think it's healthy for our market to pull back some,
Mm-hmm.
right? I think that we need like there's some natural things that need to happen in, a capitalistic society when it comes to the economics of real estate that just need to naturally like just think about like if we hold this market up with this type of program for the next 5 years, can you imagine what the snapback is going to be?
Yeah, it's not going to be pretty. It's not going to be pretty. So, Alan, I know what people are thinking right now. Like, all right, so what do I do? Like, I can't, if this is not a good option, doing the 50-year mortgage, if the affordability crisis continues to bewilder most first-time home buyers, like, what is our option if we don't want to be eternal renters? Like, what should we be doing?
Yeah, so it's ironic that we have your brother
Mm-hmm.
living here with us. He's a
Yep.
college graduate from Virginia State. He's
Shout out Trojans.
Yeah, he's lived with us for
Here.
about a year, and the reason why he's living here is because we wanted him to save money so he can purchase his first home, right?
Yeah.
And I remember how I got down here to Woodbridge wasn't my first option. There were a lot of places between Kingstown and here,
Mm-hmm.
but Woodbridge felt more attainable,
Mm-hmm.
right? Which was more affordable. Looking back on it, wasn't I could have bought, but it was more of a comfort zone, right? So I think for young people looking back at it, we all got to get back to the basics.
Yeah.
Right. What happened to saving money? Like, what happened to working a part-time job, right? To save money towards something that was going to be a good investment for you. What happened to living with roommates? What happened to living at home with parents or relatives, right? Or lowering your needs and your wants,
Mm-hmm.
right? Or just making like freaking sacrifices. Like, I think we didn't teach our kids the art of sacrificing,
Mm-hmm.
right? They think that everything's supposed to be affordable. Well, hell, it didn't feel affordable when I was buying,
Yeah.
right? It didn't feel affordable when my parents were buying on an 18% interest rate,
Mm-hmm.
right? Every generation has to work through that,
Yeah.
right? And I think the other thing that I'm seeing a lot of people do, like a lot of successful families do, is they give people their inheritance before they pass away.
Yeah.
And they use that inheritance towards purchasing a first property.
Yeah.
Or purchasing a second property, right? Or giving them enough cash to be able to get a monthly payment that's comfortable.
Yeah. Yeah.
Right. So I just think we need to like, that's personally what I think we need to be doing. But then I also put it on some municipalities, like what are municipalities doing? And I've been like preaching to our elected officials in Prince William County about them buying down rates permanently for civil servants.
Mm-hmm.
Think about that. Firefighters, teachers, people who work at the county building.
Yeah.
Like your dirt's not going to get less expensive.
Yeah.
Right. But you can hold these builders to say, look, 10% of our inventory is going to be set aside for civil servants. And we don't want you to make it cheaper. We want you to buy down the rate to like a 3% rate.
Yep. I think that's a great idea.
Right. Like, and every time I talk to them, they're like, I'm like, you're going to have to be creative.
Yep.
In this type of market. Like you can't go in and expect to pull down the values, but what you can do is make sure that they make provisions to make your real estate more affordable, and it doesn't affect the other homeowners' values.
Yep.
Right. It just makes it more affordable. The same person is buying the same $700,000 house, but now that police officer is likely to stay in your county.
Mm-hmm.
Right. Stay working in your county.
Serving the constituents that they actually are their neighbors, right? Which is always important. We already know that, right?
Right.
No, I think that's a great idea. I think it's a great idea. I think that, I want to go back to something that you said before, and it was really about, making sure that we're talking to young people, even young adults, right? The average age for a new home buyer is mid-30s, right? So, when I think about that, I think about it in the sense that, we have to, not only, offer some level of support, especially to our civil servants, but I think also we do have to get back to just, what is it that you can do or do without right? To set yourself up for the opportunity to have home ownership, right? And I know that it's tough, right? Everything's so much more expensive. There's a lot of costs that go into things, and and I get that 100%. But there's also some things that we want, right? And we go after our wants. I remember, before I owned a home, right? And I think about like I had to save. I was making probably $35,000 a year, which I felt like that was way more than I had ever made. So I wasn't like sad about it. And the problem that I was seeing was like, oh man, I'm spending most of this money. I need to figure out how I'm going to save some. I had student loans to pay back and all kinds of things. And it did take me sacrifice. I had plenty of nights of ramen noodles, right? I had plenty of nights where I wasn't going out. If I went out, we were going out to somewhere where we could listen to the music, but we certainly wasn't paying to get in, right? We were very much pooling our resources, me and my friends, right? Because we understood like this is our set aside that we're saving for our future. And then the things we want to do right here today, we're going to have to sacrifice, and hopefully it's temporary, right? So we can get to where we want to be. But there's a lot to be said about you got to make some sacrifices, right? You're not going to be able to do that $8 latte. Okay. To this day, I don't drink an $8 latte. I don't. Alan will tell you, I make my own coffee at home just because I refuse to buy an $8 latte. Okay.
It's a couple things to wrap this up, guys. And thank you for joining us on our first edition of Love and Real Estate.
Yeah.
But remember, the president didn't get his real estate fortune by working for it. It was an inheritance. His dad was in real estate, right? His dad passed him down the business, right? Mm-hmm. So I think that we can learn from anybody, right? So there are a lot of parents that have had the benefit of a market that has been doing nothing but doing this, going up, mm-hmm. right? Do not wait to pass on that inheritance, that blessing. Don't wait until you pass away. Mm-hmm. Like your kids need that extra 20,000, 50,000 now, right? So that they can benefit from compounding, the compounding of the market like you did. Yeah. Right. So I just think it's just some things that we need to just really shift and just rethink about. And we hope that, series like this and Love and Real Estate, where we can just be a little bit more free flowing and just kind of tell you what's on our mind, and, no edits, no cuts, just straight up, no chaser.
What you see is what you get.
That's it. So if there's something you want us to cover, let us know. And we're super excited to continue to bring this series to you guys.
Absolutely. And I'll just leave you with one last thing. And the thing is that our messages may not resonate for everybody in everyone's situation. So that's why it's important for you to let us know what your situations are, what you're trying to accomplish, so we can have a conversation that could be more beneficial to you, right, in your situation. We're talking about this from the standpoint of the people that we interact with on a regular basis, right? That come to us for advice and want to hear our thoughts on how we would approach it. So if there's something else that you need to hear, or you need to see, or you need to see a different approach to it, just let us know. We'll be more than happy to see if we can help you unpack that as well.
Yep.
Okay.
All right.
It's Love and Real Estate.
Alan and Crystal. We'll see you guys soon.
See you next time.
Peace.